Holy cow, what a day, what a day. The markets are getting absolutely shellacked. And so, of course, that means we have opportunity, right? Because we've been waiting for a day like this since that terrible Tuesday, however many weeks ago that was, when we came on and told you to sell everything. Well, apparently, by selling everything, then you have cash for days like today, and you get to act. So, our portfolios are actually in really good shape. So we're not wringing our hands over the action on today's market as much as we are wondering what we buy in today's wonderful sell-off. Because we had all those S&P 500 puts, the SPY puts. So on May the 12th, I think is the date. You can go back and check that episode of lunchofthestockpicker.com. Look for the May the 12th edition for more on the 135, 131, 130 put butterfly. It's a very lopsided butterfly, and it is so because we were long the SPY 130 puts, and we actually legged into the butterfly by selling or putting on a ratio put spread, which means that for every 135 SPY put we got, we sold two 131s against it. So go back, look at the May 12th episode of Lunch at the Market, and you'll get all the details on that butterfly. Needless to say that is coming in handy right now, and even if the market completely rolls over and goes down to 1280 or 1270 or 1290 or 1300, we're going to lose $1 on the short side of the butterfly, but we're going to gain $4 on the long side of the butterfly. And so net, the butterfly will be worth $3 at expiration if it's below the short strike. Ideally, the S&P 500 index gets pinned to 1,310 on June OPEX, and then we make $4 on the butterfly, and that would be supercalifragilistic. Now, in many cases, that butterfly that we had on, we actually had to roll down the 130 down to the 129 so that we could put in place 135, 130, 125 put butterflies on top of that. We did that a week or two ago. We wanted additional hedges. The markets were roaring. We got a really cheap price for the butterfly, and we wanted, again, that additional hedge. So again, ideally, the S&P 500 index gets pinned at 1,310 on OPEX. We'll see how it goes. We really don't have a ton of June positions. I think we had some Deeres. We rolled those out on the calendar to September, I think. Took an additional 30 cents, and we're still short the 85.80 put spread, I believe, in September. Deere is one of those names that's fallen so much. Was trading around $100 just a few weeks ago that we really don't mind selling in the money put spreads. And again, we expect the second half of the year to be on track. We'd like to see some of these concerns resolved. If not, at least we should have earnings in July. Again, as long as those come in line or better than expected, then we'll trade back up. So basically, we took advantage of today's sell-off not to go after June expiration or even July expiration, because again, we really have been trying to avoid the summer for months now. We've been telling you on Lunch of the Market to avoid the summer. Thankfully, at least today, we're being vindicated, and we have 4 trades for you. These are all names that you've heard about on Lunch of the Market before, so we're not going to go into all the specifics on them, except we'll give you the levels. The Deere 85.80 for 225. That is one heck of a spread. The F5 October 195 put spread you can sell for 170. The Occidental August 195 put spread you can sell for 143, and the Toronto Dominion 80.75 put spread you can sell for $1.40. The only one of those that's in the money is that Deere, and again, you're getting compensated for that. You're getting $2.25 for that spread. It's quite a bit of money. Again, for a $5 wide spread, we're getting much more than $1. Anytime we get $1, we're usually pretty happy. There really wasn't premium to sell the Junes. If there's a give me that we can pick off, say within 7 or 8 trading days of OPEX, then we'll look for it. So if the markets continue to deteriorate, we'll try to beat it to some for June options expiration. Otherwise, we're just going to reserve our dry powder. We're going to wait for the markets to feel a little better than they feel right now. There's a lot of people that were bullish that gave that up, and they've gone bearish. That's obviously helpful, as we'll get short-term oversold at some point. And then again, 1284 is the support on the S&P 500 index. That's the bogey that you're looking for to really get bullish. Once we get to that level, there shouldn't be much more downside, and it'll give us a lot of running room between there and the end of the year. So those are our levels. That's what we're looking for. Again, if we get some give me's, we'll try to get them out to you on Twitter. Of course, the best information we have is real time on Twitter. Thanks for joining us again today on Lunch of the Market. Check out some of those trades. You should get some pretty nice pricing on selling those spreads, and it should make for a great back half of the year. Thanks for joining us again on Lunch of the Market. Hope you are protected, and we'll see you tomorrow.